Good morning. Today's Thursday, December 3rd. I'm Joe Terril, president of Terril & Company Private Wealth Managers in St. Louis, Missouri. This is another brief update on our thoughts on the economy and markets during what we've been calling an extraordinary time. And as we sit here this morning, we think back to 5 or 6 months ago when we started these podcast, and believing then that we would get the pandemic in the rear view mirror and behind us, and that the world economy was going to do very well and markets should follow and also have nice gains. And that's exactly what's happened. So as we sit here today, even though we've had surges in cases up and down, and Europe is having much difficulty, while Southeast Asia is not, and Southeast Asia seems to be having almost no problems. We are firmly in the camp that the vaccine is going to all but eliminate this pandemic all over the world. Great Britain will start Monday vaccinating people, and we look for Europe, Canada, the United States, and other countries to quickly follow. The vaccines by everyone, whether it's a Johnson & Johnson, a Pfizer, Moderna, all are getting great results. So we continue to believe the markets in particular have more upside potential, and it's going to be the companies that are the most tied to the economy that do the best. The industrial companies, the chemicals, the papers, the banks, the energies, people in the travel, leisure, and entertainment business. These are the companies that will benefit the most from what we see happening in the next 3 to 4 months. So we not only are staying fully invested in those companies, we're even selectively adding to some of the positions. We are witnessing prices moving higher. We're seeing commodity prices in many cases at record highs. We are watching this and monitoring because of the potential for inflation. Somewhere down the road, and by that we mean a year or more out, we believe that the Federal Reserve Bank in the United States and other central banks around the world are going to get their hand forced. Right now they're providing a tremendous amount of liquidity, creating a tremendous amount of money, and as inflation picks up, they're not going to be able to do that. They're going to have to respond. And when they do respond to higher rates of inflation, we'll see what happens with markets. But we're anticipating that and believe we'll be prepared for it. Right now, interest rates are moving somewhat higher. We're knocking on the door of 1% on a 10-year bond, Treasury, U.S. Treasury that is, and that still historically is very low, but in comparison to the fact that it was just 0.5% 3 to 4 months ago, you can see that's a pretty good move upward. We think that movement upward in interest rates is slowly going to continue as the U.S. dollar weakens. We are agnostic about whether or not the new administration and Congress does another major stimulus package. I tend to believe they will. It's generally good for politicians to have something like that so they can reward their friends, followers, etc. with pork barrel projects. But I don't think, regardless of what the amount is or what they do, it's going to have a major effect on the world economy and or investment markets. We Also, after the election and the results of the election, we don't see any major policy changes. We don't think there's going to be major increases in taxes, don't see major increases in government regulations. We'll wait and see what they do with trade. But in general, do not see a political environment interfering with a worldwide economic recovery and prices of investments other than fixed income. Fixed income prices are going to go down and down sharply, but equity prices will continue to move higher, maybe not in glamour technology, but definitely in the companies tied to this economic recovery that we see all over the world. And just to sum up, we actually believe that the economic recovery is going to be at levels that are even more so than what things were at when the pandemic hit. If you look around the world, particularly to Southeast Asia, most of their economic figures there are much higher than what they were in 2019 before the pandemic hit. We would think that's going to happen in the United States, Europe, and elsewhere around the world. We'll be back in another 2 or 3 weeks, maybe right at the end of the year with updates. We thank you for tuning in. Have a good day.